ปัจจุบันการแข่งขันด้านเทคโนโลยีทั่วโลกมีการเติบโตอย่างต่อเนื่องการเข้าลงทุนหุ้นเทคในจังหวะนี้แพงไปช้าไปหรือไม่และอะไรเป็นปัจจัยขับเคลื่อนหุ้นกลุ่มนี้ให้เติบโตต่อไปได้คลิปสัมภาษณ์พิเศษนี้มีคำตอบครับ
กองทุนนี้บริหารโดยบริษัท Fidelity International นะครับซึ่งเป็นบริษัทที่เป็น strategic partner กับทางธนาคารกรุงไทยเองเพราะว่า Fidelity เนี่ยมีสาขาอยู่ทั่วโลกแล้วก็มีนักวิเคราะห์ถึง500คนเพราะฉะนั้นเนี่ยในแง่ของความสามารถในการวิเคราะห์เนี่ยเขาสามารถทำได้ดีเยี่ยมอยู่แล้วในวันนี้พิเศษมากนะครับก็มีโอกาสที่ผู้จัดการกองทุนหลักของกองทุนนี้จะมาให้สัมภาษณ์กับรายละเอียดของการลงทุนกองทุนนี้นะครับเราจะได้รู้ว่ากองทุนนี้มันน่าสนใจนะครับและมีโอกาสเติบโตยังไง Question one how do you think of the importance of investor to invest in technology sector going forward and what do you think of the current junctures of the market in terms of technology sector outlook?
Sure. Tech sector continues to evolve and is now essential component of all the other sectors. So it is the platform that supports every industry and is not a nice to have, but a necessary component for our daily lives. Technology supplies the core infrastructure that consumers, business, and government need to operate. That's why many companies with legacy tech infrastructure are modernizing their system to stay relevant. Tech is an enabler of structural growth and better future. Technological innovation support AI and sustainability. For example, many companies in the environmental space are developing new technologies to capture carbon, create biodiversity metrics, or scale green hydrogen. Tech is also a strategic asset given its ability to give competitive advantage on its owner. That means tech companies are often acquisition targets for larger businesses that want to control those assets. Given tech's role as a platform business, it is allowing tech companies to develop recurring revenue streams. Tech providers are moving to subscription models that provide consistent and profitable growth. These companies are effectively monetizing engagement, and demand will stay relevant as long as people continue to use technology. Many tech companies have pricing power, a valuable quality in this world of more normalizing inflation rates. These companies can raise prices as their cost rises to maintain margin. We can observe this in price increase of semiconductors and software. With technology's central role in modern life, rising demand, tech companies have built strong balance sheets with relatively low debt and high cash balance. This does not only mean they are more insulated from rising interest rate than more leveraged business, but they can also reallocate capital when opportunity arise. Of course, tech sector has seen strong rally on the back of strong sentiment around AI and the Magnificent Seven. Yet, while overall valuation of the sector is high relative to the history and some stocks look stretched, there are still attractive investment opportunity underappreciated by the market, but well positioned to capitalize on long-term tech trends such as AI, cloud computing, and digitization. That's all for the first question.
Question two. So can you tell us what's the difference for these Fidelity's technology funds?
Yes. So Fidelity's global proprietary research network with analysts based in Europe, North America, and Asia and a combination of experienced career analysts covering the sector alongside fresh perspective provided by analyst rotation policy across sector support idea generation. Companies across the TMT sector receive consistent analyst coverage, unlike many other firms, which may focus more on big names at the expense of smaller, lesser-known stocks. The fund is built on stock by stock, driven by conviction in the company and leverage some of the most promising investment ideas generated by Fidelity Global Research Team with a disciplined valuation-based approach to identify stocks across the technology value chain, differentiating us from many investors. I look at companies with different performance drivers and risk characteristics across three different categories: growth, cyclical, and special situations, resulting in a core growth portfolio that is distinctive within the peer group and has significant small and mid-cap exposure, which has been a key driver for alpha over time.
Question 3. How does your investment philosophies differ from your peers?
Yeah. So I think a consistent investment process, which considers company fundamentals, industry dynamic, and underlying technologies, as well as stock market sentiment and valuation, is a key differentiation. Having a bottom-up stock-specific focus, along with a long-term perspective and appreciation of discrete sub-industry trend, is very important. I've also always tended to be an anti-momentum investor. I think the market frequently chases momentum driven by hot and new technology narratives and underappreciate good businesses with a long-term potential. None of this guarantee our performance, but it has stood the fund in a good stead over time. I like to invest in a range of sub-themes across consumers, enterprise segment. For example, ongoing cloud penetration, electric vehicle rollout, industrial automation, e-commerce, and online and home entertainment businesses, as well as newer opportunities in areas like gig economy businesses and artificial intelligence, for example. The fund invests globally, so I've always looked at the tech universe from perspective of finding the best ideas across all regions. Of course, U.S. remains the heavyweight country within the tech sector, but there is an increasing range of industry leading non-U.S. tech names across the sector, including hardware, software, internet, IT services, and so on. And also given disruptive innovation that technology brings to many other industries, I also find opportunities in consumer, industrial, financial sectors that are outside of a typical technology boundary. For example, industrial automation, fintech, on-demand media, which is supported by Fidelity Global Sector Research, and is also one of the reasons why I try to take as broad a view of technology space as possible.
Question 4. Can you comment a little bit on the outlook of the tech sector? And how do you express your AI theme to the investment strategies?
Okay. So regarding overall outlook and positioning, firstly on AI, artificial intelligence, I'm not chasing high-valued AI stocks that the market is chasing at this moment. Instead, I'm investing in underappreciated beneficiaries, enablers of AI technology, such as semiconductor manufacturing, particularly the packaging technology that provide hardware innovation for AI, and IT services companies help enterprise customers adopt and integrate AI into their business process. And certain enterprise data software and companies also help IT enterprise customer to adopt AI into their data governance and IT infrastructure. So there's also good opportunities there. These companies have strong market position, and while AI is not a significant factor in their result at this point, they stand to benefit significantly if AI becomes mainstream, and this scenario is not priced into them. I'm also investing in misperceived AI losers in the market. Although AI will bring disruption in IT infrastructure, business process, and customer services, for example, there are good businesses that can embrace technology changes and remain relevant in the long term. And beyond AI, I'm looking at opportunity in a couple of areas. Firstly, digitization. So technology industry remains a key driver for demand in the manufacturing sector as the need for digitization continues given onshoring, supply chain complexity, ESG compliance and reporting. Design software exposed to the industrial sector and its underpenetrated digitization need trend will likely fare well in the long term. And secondly, cyclically depressed segment at this point. So demand for personal electronics has been weak for a while. Hence, there are very low expectations and valuations are very cheap. This is particularly so for smartphones and PC segment to some extent. So semiconductors exposed to this segment have a low risk of further cuts in earnings, and valuation have compressed sufficiently. Similarly, telecom capex has fallen well below sustainable level. Also, I invest in some out-of-favor stocks, so cheap out-of-favor stocks, particularly perceived AI losers, for example, customer service, BPO companies, and legacy IT services company look quite attractive at this point. I also look for M&A opportunities, particularly in small and mid-cap software companies that have potential to become target of strategic buyers or private equity companies. Lastly, China tech. So Chinese internet platform have become extremely out of favor, with valuation now become very attractive relative to global peers. So increasing opportunity exists to improve rationalization and capital allocation, including shareholder return.
Okay, so let me just summarize the point that you just talked, right? So I think the main attractiveness of this Fidelity's technology fund is first the technology fund is essential for future portfolio or investment for clients, right? The second one would be the difference of abilities of Fidelity's in terms of research capabilities around the world. The third one would be your strategy of investing. You don't chasing the rising stock price. You don't chase the momentums. You're seeking for undervalued companies. And the last one is that this portfolio is not just about the tech innovative AI company. Is also the whole beneficiary of any company that can benefiting from the technology standpoint. Is that what you want to summary?
Yes, you summarized very well.
Okay, I think we're good.
Great, thank you very much.
Thank you very much.
กองทุนเปิด KT-TECH World Technology KT-TECHNOLOGY เปิดจำหน่าย IPO ตั้งแต่วันที่ 19 ถึง 27 กุมภาพันธ์ 2567 ศึกษารายละเอียดและขอรับหนังสือชี้ชวนที่ธนาคารกรุงไทยทุกสาขา โทร 02-111-1111 ลงทุนง่ายผ่านแอปกรุงไทย Next